Real Fridays. I'm trying to see, are we live? Yeah, we are live here on Real Fridays. Had some technical difficulties in starting this, but I'm glad to be able to launch this with Brock Cassidy. Myself and Jeremy Potter should be joining us here any minute. I know he had about a 30-minute window. Happy Friday, man. January 31st, first month, 1/12 of 2025 is now behind us. And God, what a crazy 2 weeks it's been, even under the Trump administration. It's already Trump just does not he does not disappoint. Let me tell you, when it comes to keeping everyone on its toes, whether you're a supporter or not. He's the president of the United States, and he's just baffling and dismaying. I think anybody who's watching, listening, and trying to either support him, trying to criticize him, just all the above. He's just nuts. The guy's just nuts.
The reality show of it all is definitely showing through. Yeah.
Dude, it really is an incredible spectacle to some degree. I was at the Independent Mortgage Banking Conference actually with you. Unfortunately, Jeremy could not attend in Austin, Texas. And it really was incredible because there was a moment in time when he did the federal freeze on many of the government subsidies and various government programs. It impacted down payment assistance programs. It impacted VA funding. And it basically suspended, a segment of our economy and a segment of housing in a single swift stroke of a pen. It's incredible how powerful these positions of power are. And it brought many of us in a complete panic when our phones just started, going off, saying like he basically shut down HUD, in many of the federal programs supporting housing in a stroke of a pen. I mean, it was unbelievable. Now, thankfully, within I think an hour or so after having done, there was a stay of the order. I think until February 6th. What's the stay, Jeremy, of Trump's executive action that basically shut down FHA and VA lending for about an hour at the IMB. But I think a federal judge came in and pushed that out till February 6th or 4th or 5th. So it gave us an extra 10 days or so to sort of sort out what the president's real intentions were. But it just was a crazy week, crazy 2 weeks, crazy January 20th onward week, but so I don't know. Did you know anything about that, Jeremy? Just from that, I was in executive meetings with the NBA and a number of the other IMBs, and there was a guy from Veterans United sitting right next to me, an executive there, and basically his business for an hour was basically closed because he was not able, because there was an understanding or a thought that this impacted the funding of any kind of VA originations, and people were saying, people were like, shit, I got loans that are supposed to close today or tomorrow. How? Like, you can't just turn this off. But
I did go to law school. In law school, one of the first things they teach you is like, read the sentence. What does the plain language of the sentence mean? And when you throw the phrase loan disbursements into a sentence, it's natural that people might read that and think, well, VA is a loan disbursement. The words are loan disbursement. So I might as well take this pretty seriously. It might apply to my agency in the case of the government employees, or my business in the case of the Veterans United or whoever else had to deal with this. So I think the first and foremost, my comments are, shit gets real at a certain level of business, government, everything. And what I mean by real is like, people are going to read what you write. People are going to take you literally. When you're campaigning for something, you don't have to be taken literally. And in fact, we were told not to take him literally. And now when you get in government, you write something, it's going to be taken literally by lawyers, by the general counsels of these agencies, and by the head of these agencies. So for me, I didn't think it actually applied to any of our businesses when I read it, because I was thinking big picture, FHA, VA, and USDA are going to continue to make loans because that's not the type of disbursement, or that's not the type of funding they meant. But admittedly, that's not what the document said. And so as a result, you had that back and forth. And then, you got to get used to like, okay, it has to be pretty specific when you're sending out these like highly sensitive legal orders to people who have to execute on the plain language. And then I think whomever drafted that and whomever's working in the administration, whoever's working with the president, probably got so much incoming noise that it was like, holy smokes, like we have to manage this and we got to figure it out.
Yeah, we didn't mean to not let you buy houses this week. Yeah.
Jeremy's so okay, good. He froze for a moment. I'm like, people were you weren't even at the conference, and people were giving you a hard time about how Jeremy's got like the worst Wi-Fi connection in all of Detroit.
Yeah, I've had a bunch of people send me videos of a podcast Jeremy did where he is better connected, and they asked why he's always never has Wi-Fi when he does it with me. I was like, I don't know, just don't rate it.
I have to move downstairs and plug directly into the router, I guess.
What's interesting, Jeremy, about these federal agencies is that these federal agencies and the federal government are run by human. They're very human. Like the people are human, right? They're full of people that are. You just think that these elected officials and these people in these positions of power, the presumption, as it probably should be, is that these are competent people and they know what they're doing.
Yeah.
The problem is, in a lot of cases, it could be circumstantial, it could be situational, or it just could be on whole. Sometimes the person in that seat is simply not capable, and or like I said, or maybe they're just not capable in that particular moment in time. But it's incredible how there are a lot of unintended consequences, and there's sometimes people act extremely whimsically. One guy had said, well, Rick, under Biden, nobody knew who was in charge, right? And under Trump, everybody knows it's Trump in charge. And I don't know what's worse or what's better, to be quite honest, because either way, to some degree, there's potentially a failure in leadership, when things sort of go awry in the way that they have. It's almost like the party.
Yeah, look, I don't think we're here to really kind of like try to get on the like, how is the leadership of this administration or the last administration affect housing or even anything. I will say this, my gut feeling is when your team or any team doesn't feel empowered to make decisions on their own and has to go to one person to understand what to do, whether that's Elon Musk, Donald Trump, or me, like, if I don't empower my team to be able to make a decision, make a call in their area of authority, then everybody has to turn around and ask the boss. Everybody has to run everything through one or a few people to be able to act. Yeah. And whether that's the government or a company, that's a frustrating spot for the leader and the organization, because people want authority and roles and responsibilities, and they want to feel like a part of it. Your comment that, look, do we all think massive amounts of the government may have become stagnant relative to what is told, what Congress tells them to do, what is funding, things become routine? Of course, like things become routine in public companies too. And public companies get stale. And right? So yeah, we all, I think our industry is very keen to say that they're interested in making a more efficient process, making a better spending of money. Like I'm sure every industry is, but we only know ours. And like our industry seems really enthusiastic to be like, yeah, let's cut government spending. Let's be more effective. Let's be more efficient. Great. Like, yeah, no kidding. Great. Some of this stuff is hardwired from Congress. Some of this stuff are legal requirements in laws that have been passed 20, 30, 50 years ago. When were the charters written for Fannie and Freddie, right? Like there are laws that are in place that have been in place and that are from Congress and that dictate, here's your authority. Here's what you're allowed to do every day. Here's the money you spend. Here's my take was that Congress said, here's what you're allowed to do. Here's how much money you're allowed to spend. You can mess with that, rightly so, as the president of the United States, when you're elected with a mandate. You can mess with that, but you got to know you're messing with it. You got to know you're messing with laws that were passed and funding that was already set in motion that's been legally required to be spent. And that's where we're at today.
Yeah, that's fascinating. No, this was the first time at this conference where the discussion of the privatization of the GSEs was not really debated. It was more a function of, I felt like there was somewhat of a tide that turned around. No, it's not going to happen. No, it's always sort of been this way. It's not, people would say like, hey, in my career, they've always been this sort of semi-public and private sort of organization. And now in this conference, it was the first time where I saw executive leaders at a fairly, those of us that sort of oversee larger organizations, kind of acknowledging and admitting that this is our future, this is going to happen, and it's okay. Like, we're going to figure this out as an industry. I felt like that there was sort of a tone change around the subject. Still don't know what those details are going to look like and how that's going to, take effect and how it would be rolled out. But it did seem that there was a, very colorful exchange actually on stage between Bill Cosgrove and Bill Lohman to the audience members around the roles of FHFA and how this will sort of evolve moving forward under this administration's leadership. But so the conference was amazing. I thought it was probably one of the best MBA conferences I've attended in a long time. I was actually pretty impressed with it. People are pretty critical of the MBA and some of their conference, sort of quality and the content. But this one here, I honestly give them a tremendous amount of credit. I think Bob did a great job in leading and speaking, and Mike Frantoni and the rest of the staff. I think they did a great job. So
good to hear. Sorry.
Yeah.
I've been allowed. I mean, my position. Nobody is listening to me, but my position has been that they are going to get privatized, and it's going to happen faster than most people assume. This week was the first week where I heard actually a shift in tone a bit from IPO, which would sort of be the most aggressive version, to recap and release, which is sort of more a moderate version. I still think both versions back my point, which is it's happening and it's going to happen relatively quickly, all things considered. But it went from exclusively IPO, from what I was hearing before January 20th, to now this week being a little bit more recap and release. And to me, recap and release is still privatization for sure, but a little less aggressive, private capital focused language than an IPO. And so that's the only change I've heard. I still believe it's happening, and I still believe it's happening quickly, all things considered. But I did hear a little bit of a change in at least the messaging of how we're talking about it, whether that's important or not.
Yeah.
Recap and release being more like how Dave Stevens used to talk about it back in the day.
Yeah. No, I'm excited for what the future holds, but like, I think that people like us we're innovators, and we're used to sort of riding the wave as it arises, and when it recedes, you sort of catch the next wave. So we're used to sort of, operating light on our feet, if you will. Not everyone in the industry is like that. I'm optimistic that it's going to be a good thing, however it shakes out. The industry will moderate it out, both right and left, whatever the ideological sort of aspects are. But the objective is what will continue is home ownership is going to continue, right? People are going to get into homes. They're going to qualify for homes. They're going to get funding for home ownership, and the hope is that it'll be a wider credit box and there'll be more product options available. But I think anytime you introduce anything new or that fundamental and disruptive, it's gonna raise a lot of eyebrows, and we should go into that like with a tremendous amount of caution and humility, because the last thing we want to do is to truly is to disrupt that path, right? Because that path for home ownership is a lot harder for some than it is for others, and so if it becomes hard for people like us, it's going to be really hard for others who where home ownership just simply hasn't been in their family dynamic, or they could be newly immigrated into this country, or there could be a first-time home buying situation. that path is going to be especially difficult. So I'm hoping that that the industry leaders remain very humble and very focused on making sure that pathway is as frictionless as possible.
Yeah, on a very related, but I guess ideologically sort of unrelated. No, I also saw in a couple different pieces of news related to basically defunding the CFPB and a lot of financial regulation oversight. That's probably the one that I hear the most about, having worked on new mortgage products at Rocket, at EasyKnock, my last company that was creating some new products. NewZip, it's not too relevant per se, so I'm not like an expert on it, but I did find that another sort of interesting Trump, first couple weeks conversation of another thing to potentially be defunded or to lose focus on or whatever. That would lead to that would need to lead to a lot more I don't know what corporate responsibility, industry responsibility, enforcing one another through competition, enforcing one another through reputation, a little more, don't you think, Jeremy, Rick?
Yeah, can we pause on that for a second? I think that's a great point, Brock. The shift I would suggest is likely to happen is the one that you mentioned. I think I heard as well, and I think that's exactly right. Like headcount down, probably like a lot of people in our industry use like defang or like sort of those types of language. But here's what I think. I think if you work at the CFPB and you lose your job, you go and work at a state, right? Like. So I think what will happen is like state authority will become more the conversation, and state authority may actually flex that muscle a little bit more with some experience from the federal level or with some opportunity to do so, or maybe because they don't feel the feds have the same authority or I don't know. But that would be my guess is I wonder if we would see kind of, if you track those things, see folks leaving their federal position, but then finding homes or work at the state level. I don't know.
I think so too. It's interesting how that pendulum swings, Jeremy, because the very people who are complaining about the CFPB are going to absolutely complain about the power of the state of North Carolina, or the power of the state of California, or the power of the state of Virginia. This power of the state of Illinois, right? And maybe that's the inherent frustration of a federal system that we have, but. It is really, really interesting that you got to really be careful about the poison. No, you got to pick your poison, right?
Yeah.
I'm not a huge fan of the CFPB. I think the industry. I think the creation of the CFPB, I think, did not genuinely address or identify. I think they identify surface level cracks in the housing, issues with appraisal independence, an issue of kickbacks and maybe the ability to repay and that sort of thing, but that didn't cause the housing crisis. So
the ability to repay did, but okay.
Well, fair, but I'd say that the issue wasn't as much around whether or not lenders did their responsibility to determine a consumer had the ability to repay, in as much as it was lenders were offering programs and products where there was an appetite in Wall Street to both put out to the market and to acquire and then to securitize. There wasn't a single person in Wall Street that went to jail as a result of fraud it's like, this is research I've done in the sense that I could not find an executive in Wall Street that went to jail. No one from Bear Stearns or Lehman, no one went to jail, right? A lot of appraisers went to jail. A lot of loan officers went to jail. A lot of mortgage owners of mortgage companies went to jail for basically offering. And so where was the attention and focus on Wall Street reform? Well, that's not sexy. It's very complicated and very difficult to do. And so, in fact, the American Securitization Forum, which regulated and oversaw, security standardization, got disbanded, right?
I think you've now encouraged me to go back and watch Too Big to Fail again. I don't know if you've seen it. I think the one I'm referring to, which I think I have the name right, is the one on HBO where they have the celebrities playing the real people that were in the room. I think that I honestly have never taken a look at whether criminal charges fit and who they fit. Here's what I would say. It seems like there was a agreement to have bankers generally pay massive amounts of money to either acquire mortgage assets or acquire mortgage companies or acquire other institutions that had failed. And so I don't know this. I'm sort of going off the top of my head on a real-time theory here, but it was sort of like, hey, Bank of America, your traders, if your traders, I'm going to pause because I froze again, apparently.
No, you're good.
No, you're perfect. Yeah, the one time you didn't pause, you're pausing.
We're just
what I was going to say was if you involved in the securitization and the trades here, we're going to make you buy the companies that are essentially worthless, and that's your save. That's your penalty. Now, you can say that wasn't a sufficient penalty. You could say that you wanted more high-profile public penalties, like criminal penalties, like you said. But it seems like it was like, this is going to cost you so much money that your stock price will be climbing back for years as a recognition of the damage. And again, you could say that that was not the right solution. I get it. I think that's kind of where my head goes when you say, like, what was the penalty and who felt the pain. But yeah, man, that's the reason both sides think the system is rigged. Like, that's the thing about this current political climate. Both sides think the system is rigged for different reasons. That's wild. And so I think
the problem with the analogy is like it's like a doctor putting a cast in your arm because you have a broken arm, not understanding that the patient has cancer. And it's like, well, yes, agreed. You need a cast to heal the arm, but the underlying issue, which is making your bones weak, is not being addressed. And ultimately, a massive amount of
CFPB. Hold on. Just if I understand this, you don't think that the cleanup from the global financial crisis and specifically the CFPB addresses the cancer and the broken bone? Like, now listen, they didn't unlock housing. They didn't unlock housing for young people, but they never claimed to unlock housing for the next generation or for more people. What they claimed was, this is going to be the safest asset we could possibly conceive of. And that is what they did. Like, the market is the safest asset they could conceive of. So I don't know that they didn't actually get rid of the cancer and the broken bone at the same time. I'm not sure. I'd have to think about that more. But like, your complaint, I think, is that it actually went too far, but it didn't go too far in making it small, safe, and predictable. Isn't that what we've been complaining about for the last 12 years? It's small, safe, and predictable. Like, that's what it is. And then, like, you can't do anything else.
Yeah, no, I think my complaint is, did it eliminate fraud? And the answer is no. Did it eliminate bad actors in the business? No. Did it make it cleaner, easier to understand for the consumer, the process of getting a mortgage? No. Did it lower the cost to the consumer? No. Did incidents of default rates are pretty much pre-bust, pre-market crash levels, like 1.5%, 2%. It's what they've always been, right? So the point is, it really didn't have the intended effect that it was designed to do. Then the question is whether or not that effect could have. To me, the CFPB is like is almost like the Patriot Act. Did the Patriot Act make us any safer? No. Did it take a shit ton of rights from us? Absolutely. So did it actually eliminate and make us safer? No.
I was trying to figure out how you're going to make this more confrontational. We got that.
But no, I mean, I'm just saying, like, I don't think it really made us any safer or any better. And I think the CFPB could have, I think a lot of those reforms could have been driven on Wall Street, because I think, everything sort of trickles down from there anyways, right? And it probably could have been just done through the way it's always been done prior to the creation of the CFPB, right? The failure in 07 and 08, I don't think had anything to do with whether or not the CFPB was in place. I think it was a systemic failure sort of underlying from a securitization standpoint. I just simply don't see us as really any better off. I think if anything,
I think the heart and soul of Dodd-Frank was really the documentation of the customer's financial data. That became kind of like, there's a bunch of other stuff around it, but like ability to repay was like the core function inside of Truth in Lending of how to think about this and what the minimum standards would be for documenting the consumer's financial data. And so that had dramatic effect, I think, downstream for some of
But the reality is, Jeremy, no bank prior to the CFPB were doing loans assuming the consumer wouldn't pay, right? Prior to the CFPB,
bank or no
lending institution. I mean, if you look at the history of just mortgages, you get a loan with the idea, with the presumption is you're going to collect that money back, and the presumption that you're going to, in essence, pay that loan back. The problem is if you create a vacuum or an environment where it doesn't matter if the consumer pays it back, right? There's no consequence to the bank if the consumer doesn't pay it back, right? It becomes kind of and that to me is a Wall Street issue. That's not a lending issue. Because if the onus and the obligation was on the banks, and it always was until the appetite, really until the late Clinton administration and Franklin, was it Reigns, kind of changed the whole underwriting criteria and its appetite toward affordable housing and affordability of consumer lending, to be able to create this environment where they wanted everyone to own a home, and everyone should own a home, but there's got to be a process to achieve that. I think lenders up until 2004, 2005 were very much in queue with that, but it was Fannie Mae that largely, in relation to Wall Street, that really sort of shifted the focus around lenders being where the final buck stopped here, to Fannie and investors being where the buck stopped there, who weren't held accountable for any of it.
Well, if I can restate what you said, just so I understand it, the disconnect that Wall Street offered between investors, owners of the asset, and the criteria it takes to make that asset match their expectations. I think what you're saying, if I understand it correctly, is the securitization process, the speed and the appetite for the securitization process disconnected the ultimate owner of the asset
100%
from what they understood that asset to be.
Correct.
And they thought it was a different thing. They thought the person was going to pay it back. And you're saying like there was a disconnect there. To me, that's a really interesting way to think about it. How close the owner of the asset is to the performance of the asset, and why? Because I think it opens up a bunch of stuff. I also think I want to put a topic on the table for next week, or one of our future episodes, whatever, which is this question of like, how is it not the mortgage company's fault that consumers don't understand or aren't better educated or don't have a better experience with transparency? I don't understand how that's the CFPB's fault. I get it. They weighed in with the loan estimate, and the loan estimate has all of its flaws. But like to say, because I want to go back to something you said, to say that the CFPB is responsible for consumers to understand the loan when all of these loan officers are out there getting paid to do that job, and they don't, because it doesn't pay off. I only will do it with the people who can convert. I'm not going to teach everyone. I'm not going to spend time with everyone. It's not the CFPB's fault. Like, we don't have a good incentive package to get people to solve that problem when it's the entire role of that entity to solve that problem. So I would challenge like our innovation mind, our companies. I know NewZip would want to weigh in on this, but like we should actually say that like it's not the CFPB's fault that the consumer has a bad experience understanding fees. Like I'm going to have to go. I'm already a minute late to something else, but ICE just published this white paper about cures, and they're like, cures are preventable. I don't know if you saw my opinion, but like cures aren't preventable, not the way we do business, because we don't know how to promise the price. We don't know how to promise the cost of a loan. We don't know how to stand behind our process. So we only give them the best we have available at the time, and we'll tell you what it really costs 3 days before closing, or we'll tell you what it really costs at closing in many cases. So I think we should challenge ourselves a little bit.
Or not really at all, as all these,
or never, right.
or all these other costs change, which is not necessarily the lender's fault, but yeah.
I mean, I thought we were going down this like history lesson, and I really think we landed at a couple practical things that we could use to challenge ourselves to be better and challenge the industry to think differently, maybe outside the box, upside down. So you guys keep the conversation going, but I appreciate you firing me up on some of this stuff, particularly tying it to the history of the industry and then like what the right role of government is. Because as you know, that's one of the things I get all interested in intellectually and emotionally. So I sorry to run, man, but that was great.
No, I love it, man. Thanks for your contribution. This is awesome.
Right on. Bye.
Yeah. I was going to say, one of the things we're doing at NewZip is on behalf of our lenders, for our lenders, everything we do is branded to the lender, co-branded to the lender at least, we're adding like true cost of ownership functionality. So integrations with partners that have tax data, with partners that have, home ownership costs, like around repairs, replacing, roofs and furnishings and things like that. So we're just definitely haven't like cracked the whole nut by any means, but we're adding in 3 or 4 different new features related to total cost of ownership. That's what I was saying. It's like, it's hard to blame an LO for not knowing all that off the top of their head, right? It takes any number of other data sources, history, and
Jeremy raised a number of just phenomenal points, for sure. I would say he's fundamentally correct, right? And this is to your point of why solutions like NewZip are like NewZip is sort of evolving from a client retention solution to potentially a sort of a client sort of educational platform, right? To be able to not just stay connected to the realtor, the borrower, and the loan officer, but also just keep everyone informed as to what's going on, right? So it's
to in some cases kind of front run them, where it's like an LO can't afford to spend time on this client because they're not going to buy for 2 years, but we can because it's more scalable for them. Yeah, and that's where it's across with some other solutions. So we partner a lot, we build some, but that's the way we're thinking about it. Is I always say, I'm like, if you approached me a few years ago, or certainly back when I was at Rocket Homes, we only wanted pre-approved, ready to go buyers, and we'd get these out to realtors, right? You can build a whole business doing that. You still can, but we can be a hell of a lot more valuable to our partners when we help them convert the harder leads. We help them nurture the harder leads, and it's taking longer to buy anyway. So even the really good leads still are taking 6 months where they took 2 months, 9 months where they took 4 months. So it's there's plenty of opportunity there, and in a lot of ways, I think it's a really amazing niche for us to be in. It's also one that people aren't really used to playing in, so we're doing some education.
Let me ask you: did you shave this morning?
I did not shave this morning.
So what's funny is this is me not having shaved this morning, but you have such a dark. You probably could grow like a full mustache and a really full beard. Have you ever done that?
I did. Well, not really full because I don't like it, but I had like a vacation beard around New Year's. I didn't shave for like 10 days. Yeah. And it was pretty full. It was very full. Yeah.
You're one of those 5 o'clock shadow guys. Like you probably always look like you have a 5 o'clock shadow, don't you? I mean, it seems like you. It's just. I mean, I'm jealous. Yeah. I got hair envy.
All right, I appreciate it. Yeah. Got the a little bit of scruff I like, but it drives me nuts when it's more than that. So no, I did not shave, but I may before the day is out because it does start to bother.
You got to grow those mane beards, those really long beards. You have your suspenders on your pants, your Carhartt pants. I'll say this one thing that Jeremy said that I think was interesting. It is about the role of government, right? Because you have this idea that government. And it was Elizabeth Warren's clear stated objective that the CFPB is not just to protect the consumer, but it was also to ensure that the transaction was transparent and there was financial literacy around it, and that the reorganization of the loan application and the new disclosures around it were aimed, in the good faith estimate, were aimed to educate. And these were federal mandates. These were mandates to ensure that the consumer had a better understanding of the process. And the problem is when that becomes federally mandated, it alleviates the expectation, because then all of a sudden the loan officer says, well, the government's going to do this.
Well, that's
not my job anymore.
Yeah, Jeremy on this show any number of times, 3 months ago, 6 months ago, 12 months ago, said everyone's just reselling whatever the government tells them. So what's the difference? And he's right.
He's 100% right.
Mostly, yeah. But then it's like, but then as soon as they're not doing that, then everyone really will have different standards and really will.
Well, and it does get to a question of what the federal government's role is in private enterprise. Yes, to protect the consumer, but it should never displace the end obligation of the merchant or the company who has the fundamental relationship with the consumer. And ultimately, whoever has the relationship should have the fundamental obligation, right? To take care of the consumer, to make sure the consumer is informed and understands the relationship that they're entering into at the point in time that they're entering into. The moment you displace that accountability, responsibility, and oversight from the company to all the way in DC, the problem is it's that the shift is wrong, right? That doesn't mean that the CFPB doesn't have a role. The problem is that the CFPB, what do we want to do? Just shut down all mortgage companies and have the CFPB open up a mortgage company and just go to the CFPB for everything? Right. That'd be stupid, right? But that's some companies, some countries actually evolve in that direction where these are state-owned enterprises, where you have state banks and you have essentially state-controlled, issued financial obligations. But if this is going to be a private-driven economy, and you have to empower and then oversee and hold accountable those who have the most authority and responsibility to the consumer, and that's going to be the private enterprise.
And give the best loan officers, the most educated loan officers, that chance to stand out too, right? Like if we're looking at the business, the business mindset of it all is like, the best LOs are going to be a lot better than the worst LOs, and not that they always haven't been, but now it'll be more than just sales. It'll also be education. It'll also be all kinds of other things.
Well, and then solutions like NewZip and others, I think, are going to be really strong in being able to help facilitate that, to be able to elevate sort of the caliber of loan officers. I know that's at NFM and other organizations, by trying to sort of through use of technology and so on, elevate the personal practice of the loan officer, to equip them and to scale their efforts across more and more consumers, I think is just our objective, standardizing that quality and scaling it,
No, agreed. That's where we're building. Almost everything we're building is in that nurture, educate, integrate to give more value sort of plays. Yeah. Things like tax costs, insurance costs, home ownership costs, trying to get any of those costs we can down by being partnered with us through partnerships or through us building things. So that's how we're approaching it. It's not, it's not like we need a lot of people working on it at a lot of different angles. But that's kind of what we're doing, because most of our clients are focused on lending in a bunch of different states, or lending in a bunch of different MSAs anyway. So it gets harder the more that's the reality. So but yeah, we're trying to figure out versions of it that work for other people. So always interesting to think about.
Amen.
Excited to do a live Real Fridays with you next week at the New Hampshire, Vermont, Maine Mortgage Conference, Tri-State Mortgage Conference.
We should look to actually live stream that. Why don't we live stream that through how we're doing it here? Why don't we just live stream that live at the conference?
Yeah.
Why not?
We can at least, throw up a screen in front of us if they don't. I don't know what tech they have, but yeah, we should definitely do that.
What I'll do is I'll bring my laptop, I'll bring my high-res camera, I'll bring the microphone, and this way we can, we'll have fun with it. This is a good idea. This is a great idea.
Yeah, so we'll have a special segment next week. It'll be a slightly different time, right? 9 a.m. instead of noon, instead of 12:30. But yeah. Eastern.
And are we speaking on Thursday or Friday?
I believe it's Friday, right? Yeah, Friday at 9:05 a.m.
Got it. Yeah, good. So I'll just set it up for next Friday at 9 a.m. and I'll communicate that and tell everyone that that the most important housing event in the United States between Vermont, New Hampshire, and Maine is going to be brought to them live next Thursday and Friday.
No more, no less. Yeah.
So,
look forward to it.
Well, good. Well, looking handsome as ever, brother. And I'm glad you survived Austin, Texas. It was good to hang out.
Yeah, and narrowly as always. But yeah, you look good too. Made it to your cabin, it looks like, so that's good.
Yeah, no, I'm at my lake place here in Massachusetts, the office here, and just kind of working away. So I just drove in from Vermont, yeah, no, I love it in Vermont, man. It's Vermont is the best. It genuinely is, and love the restaurants there, the restaurant scenes, the local businesses. There's nothing better than going to the local restaurant, and like you could be like last time I was at this restaurant, and it was like you have, I think it was at a Mexican restaurant called Julio's, and literally there was a guy who was like the head of legislative affairs for the state capitol was right there. There was the right hand, like the lieutenant governor was there having a beer. Myself, there was a farmer, and it was like a microcosm of the United States. In the, was a guy who sold, RVs in the local in Barrie, Vermont, and it was just amazing. It's amazing to be that close to the decision makers. But the flip side is because they're so close in proximity to the electorate, you really do get a citizenry politic in Vermont that you don't get in Massachusetts or New York, because Albany is so far away, or Boston is so far away.
Maine's really similar, although that just made me think of some of the scenes in Yellowstone I've been watching recently, where like the governor is like hanging out with the ranchers and getting their input on everything. But
the governor of Vermont does have one security guard. He's got a cop that follows him around everywhere. It's kind of classic, but it's politics. The death to politics is when the problem solvers to a problem is far removed from the actual problem itself, right? Mm-hmm. When they're far removed from the implementation of a solution, it's just human nature to get really lazy.
Yeah, absolutely. You've outsourced your whatever.
Well, accountability diminishes. The further you are away from the problem, accountability diminishes, and I think the quality of the solution diminishes too. But well, good to see you, my friend. And I look forward to next week. And Wednesday you're gonna fly up, and you're gonna stay at my lake house, right? On Wednesday. Are you gonna do that?
Yeah, nailing down the plans. I'm going to see a partner in Indianapolis for the first part of next week. Really united, and then figuring out travel plans from there. But I will definitely be in New England by Thursday.
Well, you're not coming Wednesday, or what? Have you not committed?
I still need to book. I still need to book everything. It's like I got like 7 work trips and like.
Dude, I'm a planner. I need to know. I need to know if I need to make the bunk bed or what, here in the cabin.
You don't even make the bunk bed just yet. I'll let you know.
All right, man. We'll talk to you soon.
All right. Sounds good. See you. All right.
Take care.